And Bitcoin specifically, you had the JP Morgan CEO and chairman Jamie Dimon calling it essentially pet rock, and once again calling into question its worth and its value here. I would love to get your reaction, especially as some of the financial industry elites and figureheads are continuing to cast some doubt here.
Yeah, thanks for having me, Brad. What do I think about Jeffrey Epstein's banker being concerned that a distributed, decentralized, open public money could potentially be used for bad things, sitting on a ski resort in Davos? I don't really care. I don't know why anyone cares, right? I mean, that guy knows when money's used for bad things. So it's a weird opinion of his. And my pet rock was up, as you said, 160% last year. It performed well against the dollar. So I don't know. I don't really care what that guy has to say about Bitcoin. I don't know why anybody does.
Yo! What is going on, guys? Welcome back to another episode of the Jack Mallers Show. I am your host, Jack. Believe that. You're listening to another episode of Mailbag Monday. Technically, you are listening to episode 93, titled The Liquidity Airpocket, Real Rates, Panic, and Bitcoin's Flush. I am with family for the holidays, for Thanksgiving. So happy early Thanksgiving to those that celebrate. So bear with me here. I've got a little makeshift desk in front of me. So let me pull up the Bitcoin price because, ladies and gentlemen, I'm talking to you at a price of $88,720 US. That puts our market cap at 1.77 trillion. Our all-time high remains at 126,160. We made that all-time high now 49 days ago on October 6, 2025. We are less than 30% off that high now. We are at 29.5% off our all-time high. Bitcoin block height. What was the last Bitcoin block mined before I hit stream? It was Bitcoin block 925,057 for those keeping time in Bitcoin block heights. How the hell are we doing? You guys panicked? You stressed? Bitcoin's crashing? AI's falling apart? The world's freaking out? Have no fear. The Jack Mallers Show is here. Hey, but I'm not a rapper or a podcaster. Let's get into it, ladies and gentlemen. Chapter 1, understanding Bitcoin's price action. So Bitcoin found a low for now around $80,000. On the last show, I told you guys, it could fall to 85, it could fall to 80, it could fall lower. I don't know. This is not the top. What 126 was not the top. It's not the end of the cycle. And so we did find somewhat of a low for now around that $80,000 number. We have since bounced quite a bit. There's a lot that has happened. I want to walk you guys through the data because a lot of people seem to have found value in my liquidity vantage point, how I was viewing the cycle, how far we are off from highs. I've been in Bitcoin for 13 years. I've seen 30% drops from highs, and then we rally further. My favorite memory was in 2017. And so let's walk through it. I'm also, give me feedback on the mic. Last time I used my AirPods mic, it rubbed against my hoodie, and you guys didn't like that, but I need both my hands to flip through my slides. So should I just go shirtless? No. Kid show. Let's see, can I wrap it around my face like that? Too close to my mouth? Whatever. The show goes on. All right. First slide, supply distribution. So this from the Rational Root. More than 5% of all Bitcoin changed hands during this drawdown. Guys, let me repeat that for you. More than 5% of the entire Bitcoin supply changed hands. Look at that spike between 83K and 86K. This, guys, is what we want to see. This is forced selling. This is panic selling. This is capitulation. It's very difficult for Bitcoin to continue to go lower and lower and lower and lower when you've seen this level of capitulation and distribution. Okay? Bitcoin is not slowly bleeding down. It's not struggling to find momentum. I fundamentally believe that we are the overall market is trying to sort out what I would call liquidity dislocation. When the U.S. government runs a $200 billion trade surplus in September, which implies that we run a $2 trillion trade surplus annually. We know that's not true. We know that's gimmicky. That was very likely to try and fill the TGA, the Treasury General's account. Then, for the government to shut down, again, that was very helpful in drying up liquidity and concentrating it in the Treasury General's account. And so I think that this is liquidity dislocation, extreme tightening in a really weird time that was fairly unexpected. This was an unexpected event. Next, let's look at Bitcoin's implied volatility. I just want to show you guys, I'd given the speech at the strike offices as well. You can hear my stubble on the microphone. Okay, that should be better. The implied volatility is extremely low. And this is relevant for a few reasons. For one, this kind of solidifies this idea that Bitcoin has not reached peak price discovery all-time highs. Our volatility, if you look at our volatility, this goes all the way back to 2022. You can see in early 2022 that extreme peak implied volatility was when we were setting all-time highs. Jerome Powell went on and hiked rates as fast as they've ever been hiked, crashed all markets, rendered banks insolvent, FTX imploded, so on and so forth. We've been at relatively low volatility since then, and even on this flush, even on this decline from all-time highs. And the reason I want to reference that and bring that up is usually you see extremely high volatility on declines, like when the market is puking. And we didn't. And so again, this to me looks like it was forced selling in extremely illiquid markets. The market did not expect this downturn, and there were no structured bids to go catch it. So this, again, just further solidifies my point that no one was actively bidding, no one expected a meltdown, and the market had just low liquidity. Next, Bitcoin unrealized profit and loss. So what are you looking at? The black is Bitcoin's price. Red, orange, yellow, green, blue. Those signal in color different feelings, market structures throughout price action. So what we're looking at in green is belief and denial. So effectively, cut to the chase. Can you guys see my cursor? Do you see this massive dip in sentiment right below the price? That is extremely profound. So what this is showing us is the percentage of unrealized profit versus loss across the entire Bitcoin supply. And we dropped substantially, which means that a lot of unrealized profit evaporated. So we're not in euphoria and greed. We're not in denial. We're not in the hope and fear. This is very much par for the course for a mid-cycle anxiety zone. 30, 35% off the highs. Guys, this is exactly what we saw in April. Do you guys see the break between green and yellow back here in April? That was Liberation Day, Liberation Week. Stock market down 20%, Bitcoin down 35% from highs, everyone screaming for a Great Depression. And then all of a sudden, liquidity came back and we rallied to 126,000 in Bitcoin. The stock market made new highs and everything was fine because they printed the money. They printed the money. And so again, this to me is not a red capitulation. I don't see the color orange of extreme fear. This very simply is anxiety. This very simply is illiquidity. Next, the IBIT ETF flows. Let's look at the outflows. So what are you looking at? The orange line is Bitcoin's price, and the green is IBIT's flows. You can see they've gone negative. You've probably seen some headlines like, oh my goodness, IBIT made record outflows. Institutions don't love Bitcoin anymore. The outflows are on par with when? With Liberation Day, with earlier this year. Nothing to worry about. There have been structural inflows this entire time. We also talked about the carry trade. When the carry trade unwinds, you see outflows in the ETF. If anything, all of the tourists have exited the IBIT product. So what we'll talk about is short-term holders, speculative traders. They have been washed out, and really they realize their positions as losses. But if you zoom out and you look at the IBIT product, it's fairly straightforward. When there is no liquidity, Bitcoin reacts the most. When there's liquidity, Bitcoin reacts the most. We went through this very weird liquidity dislocation with a government surplus in September and a government shutdown. The repo markets are extremely strained, which we'll talk about in a second. Japan is blowing up. Literally, Japan is acting like an emerging market, which we'll talk about in a second. And so Bitcoin, very simply, is the liquidity smoke alarm it was designed to be. The IBIT flows are nothing to be concerned about. We are just going back to Liberation Day outflows because there is no liquidity. It's all a good thing. Next, spent volume in profit. Okay, what are we looking at here? Volume of Bitcoin sold at a profit, segmented by how long the coins were held. So red is extreme short-term holders, blue is much longer-term holders, okay? Why does this matter? This is interesting. This is an extreme spike in profit volume across all the cohorts. So you see every single cohort spike massively. If you look over here, the other spikes have been when we're in extreme price discovery and making all-time high after all-time high after all-time high. So you can see this just goes back to 2019, but you can see these spikes seem to correlate with parabolic bull runs. Like you can see here in 2024, you can see here in 2023. And so it is interesting that this is spiking while the price is declining, not appreciating. Now, why would this be happening? I don't know. You can come up with all sorts of different justifications. Are people believing in the 4-year cycle? Are they front running? Are they trying to manifest the 4-year cycle and seeking exit liquidity? Are people strained financially because of the tight liquidity? People are getting margin called. People are needing to post collateral in other parts of their life. It's interesting, but the point is the fact that you're seeing a spike in this data while Bitcoin's going down, to me, shows panic profit taking, mechanical de-risking. So again, when markets get extremely illiquid, people have to de-risk. You have to sell what's liquid. You sell what you can, not what you want. And capital rotation. So if I go next, this is even more interesting to me. So this is long-term holders spending indicator. So what are we looking at here? When long-term holders, so this is 155 plus days, so not that long-term, but nonetheless, I guess that's what we count in this visual. The point is, these little orange segments, again, they correlate with either parabolic moves traditionally, like the local highs. And so this one is interesting. Why are quote unquote long-term holders? That's the other thing about this metric, by the way, guys, is that people say OGs are dumping, OGs are dumping. But you look into the data and it's like an OG is someone who's been holding Bitcoin for 3 years. It's like, that's an OG? It's as if like the people from 2010 are selling all their Bitcoin and now you get all this FUD about quantum, all this bullshit. And none of it's true. You look into the data and that's not an OG. Like I think of an OG 2015, like pre-SegWit, pre-2017 bull run. Everyone has their own definitions, all right? But anyway, just wanted to make that point. I digress. They're selling into, weirdly, weakness, which is a little bit interesting. Again, is it 4-year cycle speculation? Is liquidity so tight that people need to rotate capital? Or, like we talked about before, is Bitcoin going through its IPO moment where these holders finally have the liquidity to exit? Where before, selling 80,000 Bitcoin was impossible. You'd move the market too much. And so now that you have these ETF flows, the corporate flows, the public companies buying loads and loads of Bitcoin, you have exit liquidity where you get to see some distribution. But again, the point of this visual, this is not a blow off top. This is not the end of a cycle. All of this data points very firmly to a brief stretch of liquidity dislocation, of liquidity stress, of forced selling, and of panic selling from short-term holders. Because look at this. This is short-term holder realized loss. I'm going to say that again. This is probably my favorite one. Short-term holder realized loss. Take a look at this, guys. Black is the Bitcoin price, the black line. Orange is the short-term holders realized loss. Look at that spike on the far right. It almost made an all-time high going back to 2022. Now, November 2022, does anyone remember what happened then? FTX. That's when FTX blew up. So fast forward to today, short-term holding realized loss. So these are not real Bitcoiners. These are tourists, people looking for a short-term trade, people looking for momentum, people swing trading, people day trading. These aren't the stay humble and stack satsers. These aren't the loyal Jack Mallard show listeners. No. Tourists, I tell you. And they capitulated. This is what we love to see. They capitulated, they got rid of their coins at a loss, at the highest rate since the FTX implosion. Again, guys, you love to see this because if I go all the way back to my first one, over 5% of Bitcoin changed hands during this dip. Unbelievable amount of distribution. And when you go to this one and you see that near FTX levels, like we were off by a pixel to FTX levels of realized loss from tourists. These are all extremely good signs. Another one, when has the Mayer multiple been this low? Okay, so all of the indicators, the fear index, RSI, Mayer multiple, it shows that Bitcoin is going to operate from an extreme level of strength. There's not that much downside to be realized left. And we're sitting at 88,000. Really, really healthy sign. And then this screenshot from Charlie at 80,600, Bitcoin is now down 36% from its all-time high of 126,300 in early October. That's the biggest correction off an all-time high since 2022. Is this unusual volatility for Bitcoin? Not at all. We've seen similar or bigger drawdowns every year. Every year. Guys, the last time we saw something like this was this year. April 7th, Liberation Day. Okay? We've seen 33%. And again, could it get to 94% down, which we saw in 2011? Sure, technically anything is possible. This show's not financial advice, right? I'm not your dad. I'm not your babysitter. I'm not your financial advisor. But to me, this is much more structurally. Look at the area here in 2017, okay? Down 33%, down 39%, down 40%, down 30% from highs. By the way, guys, 2017, the price opened January 1st, I'll never forget it, at $1,000, and it hit $20,000 that calendar year. So 20x, and it experienced that parabolic move while being down 30% from highs, down 41% from highs, down 39% from highs, down 33% from highs. To me, what are we living through now? Look at this. Down 32% Liberation Day. Down 36% government shutdown, repo market stress, trade surplus. Remember, government surplus, private sector deficit. Government deficit, private sector surplus. Okay? So, what's the real culprit? What's the real issue going on in markets? It's the macro. It's the liquidity. What I've been hinting at This time, this show, we've got a little bit more detail. Since we last spoke, the New York Fed convened and met with Wall Street firms over key lending facility. This is from FT, the Financial Times. Oops, I clicked the wrong button. Federal Reserve officials describes the standing repo facility as a crucial pressure relief valve to help the central bank keep short-term borrowing costs within their target range. Okay, we go on. This is from the article. New York Federal Reserve President John Williams convened a meeting with Wall Street dealers this week over a key short-term lending facility, underscoring officials' concerns about strains in U.S. money markets. The hastily arranged meeting, which has not been previously reported, took place on the sidelines of the Fed's annual Treasury Market Conference on Wednesday, according to 3 people familiar with the matter. It comes at a time when banks, investors, and officials are concerned about signs of stress in an arcane but vital corner of the U.S. financial system. Williams solicited feedback from primary dealers, mostly banks that underwrite the government's debt, on the use of the Fed's standing repo facility, which central bank officials describe as a crucial pressure relief valve to help them keep short-term borrowing costs within their target range. A representative from many of the 25 primary dealers were in attendance, the people said. They noted that the attendants were broadly members of banks' teams specialized in fixed income markets. A spokesperson for the New York Fed confirmed the meeting took place. Next, from Bloomberg, bond dealers rebuff New York Fed tool as strains in repo market build. The takeaways from the article: bond traders have pushed back against Federal Reserve officials urging them to use the standing repo facility, the SRF, complicating the central bank's efforts to ease strains in the market for repurchase agreements. So here's what's going on, guys. There's not enough liquidity in the system. And we've talked about this, but let me recap real quick. Well, simply put, the U.S. government's in too much debt. That's the real answer. But the more elaborative answer: over the last few years, the United States has issued this debt via T-bills, short-term debt, okay? Not long-term. They can't sell 10-year bonds. No one wants to buy that dog shit. Nobody wants United States counterparty risk for the next decade. Everyone's pricing in significant amounts of debasement. Nobody wants that. So where can they borrow money? Short-term, T-bills. Now, when they borrow so many T-bills, that puts an extreme amount of strain on the financial system, in particular liquidity. Because the TGA, the Treasury General's account, needs a high balance to roll those T-bills over every week. The Treasury is rolling over an estimate $550 billion of T-bills a week. And so Scott Bessent needs a higher checking account to roll those over so they don't have a failed auction. So what we saw in September and October, whether purposeful or not, was a structural rebuild of the Treasury General's account. The balance grew from hundreds of billions to $1 trillion. That pulls liquidity out of the financial system. The need for the U.S. to continue to roll this debt and finance more debt, especially in the short term, puts higher and higher and higher strain on the financial system. Now, the Fed built a facility to solve this problem, okay? The standing repo facility is effectively like an immediate emergency money printer if you have to, so that these markets, these overnight markets, would not collapse. These banks are saying, we don't want to use that. It makes us look bad. So I'll read on. Primary dealers told officials that borrowing directly from the central bank still carries a stigma and could be seen as a sign of trouble, and also pointed to operational and balance sheet constraints that made it difficult to access the facility. So, quickly, let me take a step back. We've been told the U.S. isn't worried about the strain, everything's fine, Bitcoin's tanking because of quantum. Bitcoin's tanking because OG believers don't believe in it anymore. Wrong. No. Incorrect. Bitcoin's collapsing. It's going to 10K. Bear market. No. Wrong. Incorrect. There's no liquidity in the financial system, and Bitcoin's the only free market that can tell us the truth. Because all your other bullshit indicators, all your other legacy fiat financial system, it doesn't tell us the truth. It's centrally planned, it's controlled, it's at off hours, it's overly regulated, isn't audited. So what's happening? There's no liquidity in the system. And you're going to sit here and tell me that the Fed and the US government isn't concerned about that? Oh, but they're having sidecar meetings at the Fed Treasury Conference about what to do and officially confirmed by the Fed? So the Fed, guys, the Fed went to the Financial Times and to Bloomberg and said, please report this. Okay. And here's the deal. The primary dealers don't want to use the facility. They're saying their balance sheet is too tight and too illiquid, and there's too much of a stigma. It would cause panic. They're effectively saying if we use this facility to the depth in which we need to, the rest of the world will realize how fucked we are. What do you want us to do? Dealers have floated ideas to make the facility more attractive, including allowing transactions to be centrally cleared, as the Fed aims to ensure the facility remains effective for rate control amid short-term borrowing market strains. So the primary dealers and the banks are saying, help us help you. We don't want to tap that thing because it'll show the world how bad it really is, and our balance sheets are constrained already. And the Fed is saying, please, please, please. This is from Stephen Myron. This morning, I spoke about regulatory dominance of the Fed's balance sheet. For all the talk about fiscal dominance, the truth is the Fed is forced to take actions on balance sheet due to the regulatory framework binding banks. Here we go again. Deregulate the banks. So what we're seeing now, there is no liquidity. There is no liquidity for a lot of reasons. One of the reasons, the government had just shut down. Liquidity will come back now that the government is reopened. Another reason, there was a weird September surplus that was probably an accounting trick, but nonetheless aided to growing the TGA, growing the Treasury General's account. Again, that takes liquidity out, and they're doing that because of the amount of indebtedness the United States is in. So where does the United States look to find marginal lenders to the government? Its own domestic banking system. When you deposit money into Chase, into Bank of America, into Citi, that's not your money anymore. They take your deposit and they lend it to the United States. The banks are saying our balance sheets are dry. Our balance sheet has no more liquidity. We need further deregulation. We need to add more leverage, and we need stigma positive ways for us to tap these facilities without making it look as bad as it actually is. Now, to the even juicier part. One of the reasons liquidity has fallen off a cliff is because Japan is falling off a cliff. Okay? What are we looking at? This is the dollar yen in blue and the JPY 10-year in red. Spiking, guys, spiking. So in red, this is not good. When you see the JP 10-year go that high and that fast, this is very bad. This is emerging market behavior. And this is the dollar strengthening incredibly against the yen. Let me tell you guys why this is very bad for liquidity and very bad for assets. First of all, for liquidity, Japan is really like the apex predator for providing liquidity to the global financial system because of the carry trade. The carry trade, very simply put, is you can borrow money for free in Japan, effectively. Like, rates are zero and have been, well, not technically anymore. I don't know what they are right now, 15 basis points. But rates have been zero or as close to zero as any other massive market, and they've been there for years. And so it is effectively free to borrow money in Japan, and then you reinvest that money into where you can get returns. And so the carry trade is I go to Japan, I borrow money for free, and I buy Nvidia, I buy Tesla, I buy Bitcoin. Now, when the 10-year spikes and the dollar spikes against the yen, this forces the carry trade to unwind. We saw this happen to Bitcoin also a few years ago, for those that have been around and remember. When the dollar strengthens like this, that is not good for assets. Assets like a weaker dollar. The United States is so indebted, they need a weaker dollar. The only way they can default is through inflation, a slow default through inflation. So when Japan starts to freak out and have problems, it forces the carry trade to unwind, which forces the people that borrowed these Japanese yen to buy primarily United States assets that are producing returns. They have to sell those assets. And if I go to the next one, this is very interesting, guys. In the blue is the 10-year, the US 10-year. In the red is the Japanese 10-year. Look at how correlated they were up until this year. Listen, look, I go back. The Japanese 10-year rises and spikes, then the dollar spikes. The dollar spikes, bad for assets, bad for America. If this continues to spike, investors are going to be selling treasuries, they're going to be selling stocks, they're going to be selling Bitcoin, and the whole financial system is going to go kapoosh. Last time this happened, what do you think they did? Printed the money. Again, Bitcoin will win either way. Either the entire financial system collapses, the world goes through a Great Depression so great that it makes the other Great Depression seem like Narnia, seem like a fairy tale. And then on the other side of the great human reset, Bitcoin is the world reserve currency, naturally. Because again, at the end of the day, it's just a money competition. May the best money win. Or they print the money. They default silently through inflation. Every time there's a crisis, they bail out. They continue to extract wealth to make whole from the people. Either way, Bitcoin wins. So far, what they've done is print the money, default silently through inflation. And what we're seeing in Japan is not good for the United States. Listen, this 10-year from the US will need to catch up to this Japanese 10-year. Okay? Clearly, they've made a substantial effort to protect the US 10-year. Clearly, that's what this visual shows. And the reason I pull up this next slide, do you guys remember the MOVE index? We talked about this during Liberation Week, Liberation Day, whatever the fuck it was. Okay, this tweet, U.S. Treasury volatility. The MOVE index is printing up on a monthly basis for the first time since April. What happened in April? Liberation Day. However, volatility is still fairly contained as the index is still below 2022 levels when volatility faced upward pressure from the Ukraine invasion and the start of the U.S. rate hike in Feb/March of 2022. So, the MOVE index is starting to move again. You can see Liberation, you see this spike? That was when Trump was like, whoa, no. Goodbye. Revert. And Bitcoin went from 30% off highs, Great Depression, oh my God, the world's falling apart, to new all-time highs, 126,000. The MOVE index is starting to move again. Japan is falling apart, okay? The Fed and banks are fighting about how they're going to sustain liquidity. Okay, so what was the title of this section? Macro liquidity is the real culprit. This is a liquidity dislocation. This is a liquidity crisis, guys. This is not 4-year cycle. Give me a break. Have me on record saying I don't believe in it for a second. So what is next? Here's what's next in my opinion. First of all, AI. This from the Wall Street Journal today. How the U.S. economy became hooked on AI spending. Growth has been bolstered by data center investment and stock market wealth. A reversal could raise the risk of a recession. Now, this is from the AI and crypto czar of the U.S. government, David Sachs. According to today's Wall Street Journal article, AI-related investment accounts for half of GDP growth, 50% of GDP growth. Remember, guys, that Besant said, grow. We're going to grow our way out. Because we tried Elon Musk Doge austerity, didn't work. We tried putting obnoxious and obscene tariffs on everyone. China said, go fuck yourself. Absolutely not. Do you want rare earths? Stop being ridiculous. And so then we've reverted to, we got to print the money, we got to grow. Where is growth? It's AI. So literally, the spokesperson from the government comes out and says, according to today's Wall Street Journal, AI-related investment accounts for 50% of GDP growth. A reversal would risk recession. We can't afford to go backwards. Okay, there you go. The US government is starting to softly imply a government backstop to AI. A lot of the Bitcoin dip was also surfacing fears about an AI bubble. What if Nvidia missed earnings? Would the world fall apart? Oracle, the credit spreads on Oracle are starting to get really concerning. Here comes the government saying, wait a second, we can't afford for AI to not work for national security, but probably more importantly for GDP growth. Let me play this video for you guys.
Years. You've said AI could wipe out half of all entry-level white-collar jobs and spike unemployment to 10 to 20% in the next 1 to 5 years.
Yes,
That's shocking.
That is the future we could see if we don't become aware of this problem now.
Half of all entry-level white-collar jobs.
Well, if we look at entry-level consultants, lawyers, financial professionals, many of kind of the white-collar service industries, a lot of what they do, AI models are already quite good at, and without intervention. It's hard to imagine that there won't be some significant job impact there. And my worry is that it'll be broad and it'll be faster than what we've seen with previous technology.
You've said.
Okay, you heard it first on this show. You saw it softly reported through some mainstream media outlets. Now it's on 60 Minutes. The most politicized show there is. AI could wipe out half, 50% of all entry-level white-collar jobs and spike unemployment to 10 to 20% in the next 1 to 5 years. Guys, so here's the deal. Here's my point. As Luke says, if AI doesn't work, it will risk recession, blowing out fiscal deficits into insufficient foreign U.S. Treasury demand. So if AI doesn't work, everything falls apart. We have to print money. If AI does work, it will undermine the U.S. fiscal position. Around half of U.S. federal receipts come from employment. So around half of the U.S. government's tax receipts that goes towards financing interest payments on the debt. So the U.S. has to pay money to borrow money. No one's lending to the United States for free. Would you buy a 10-year for 0%? Half of the federal receipts come from employed people. So if AI works, it will undermine the U.S. fiscal problem, blowing out deficits into insufficient U.S. Treasury demand. What is the common denominator here? Insufficient U.S. Treasury demand. Nobody wants dog shit treasuries from the drunk person at the party that's $38 trillion in debt. No matter what, they have to print the money. And they're starting to say the quiet part out loud. Next, guys, listen, the other thing about this, cycle is ending, 4-year this, 4-year that. Let me say something. Back when we made a top in 2022, so by the way, this is the Fed's balance sheet. Back when we made a top in 2022 in Bitcoin, the Fed's balance sheet was at about $9 trillion. And they came out and said, we're ending QE. We're starting QT. We're going to raise rates as fast as we can. They raised rates faster than any cycle ever, and they went on to remove close to $3 trillion off a $9 trillion balance sheet. The Fed's balance sheet now sits close to $6 trillion. 33% of the Fed's balance sheet evaporated, erased. You hear often, what if China sells its treasuries and dumps its treasuries? What if Japan has to dump all of its treasuries? You can take Japan and China and combine them, and they wouldn't have the impact that the Fed has had since 2022. I give you this context to say, QT, this blue line going down, ends on December 1st. It ends in 1 week. QE resumes shortly after that. So for people, listen, if Jerome Powell was coming out and saying, we're bringing the Fed's balance sheet from 6 trillion to 1 trillion, and we're going to raise rates from 4% to 10%, I will be on this show saying, you got to stay humble, you got to stack sats. Bear markets are temporary. This asset is, that's not what's happening. What's happening is the opposite. Japan's blowing up. AI needs a government backstop. QT is ending. QE is starting. Rate cuts. There's 3 rate cuts priced in before we get a new Fed chair. And now Bessent is out saying Trump should be the Fed chair. Let's move on. So, on the back half of that, futures rise after Fed's Williams signals possible December rate cut. The other thing that happened in conjunction with Bitcoin's decline is Powell came out and hinted that he wasn't going to touch rates in December. The markets did not like that. The tweet reads, U.S. stock futures climbed Friday after Fed President John Williams hinted a December rate cut. S&P 500 futures rose 50 basis points and NASDAQ futures gained 40 basis points despite major indexes heading for their worst week since March. Williams said there is, quote, room for further adjustment, end quote, to rates and noted easing inflation risks. Traders lifted the odds of a December rate cut over 50%, up from 37%. The NASDAQ remains under pressure amid concerns over tech monetization and rising debt. Williams also said inflation has stalled near 2.75%, partly due to trade policies, but he expects it to move back toward 2% by 2027. Thanks, bro. All right. Look at this, guys. This is Polymarket Fed decision in December. You can see precisely when Jerome Powell said, fuck Trump, fuck your rate cut, and odds tanked, and markets freaked out. And then you can see the Fed now say, well, wait a second. Never mind. We will cut in December. And now the odds are back above 80%. All right, let's hear from our boy Scotty B. I got 2 Scotty B videos for you guys today.
I think
you're not taking that job.
Brett, there are, I think, 340 million Americans now. I think I can safely say that I will not be the Fed chair. I think President Trump will make a great Fed chair. He has an open mind. He understands monetary policy better than a lot of people on the Fed.
But the list, you're not taking that job.
Brett, there, I think.
Did you guys just hear what I heard? I think President Trump would make a great Fed chair. Listen, do I think Trump's going to be the Fed chair? No. Do I think Bessent's going to be the Fed chair? Doesn't look like it. What are they signaling to the market? The Fed chair is effectively Trump. The next Fed chair is going to do as told, right? Really important signaling, guys. Again, you think Bitcoin's going to go through a multi-year bear market where QT is ending December 1st. QE has to start. Rate cuts, Japan blowing up. AI needs a federal backstop or else we go into a recession. AI is going to displace 50% of entry-level white-collar jobs. AI is going to send unemployment to 20%. The U.S. government relies on employment to finance its interest payments because people that are employed spend in the economy and pay taxes. Oh, and then Trump gets to place who he wants to be as Fed chair in May, right before midterms. Tell me again that Bitcoin's going to go through a 2 to 3 year bear market? Miss me with that shit. Not on this show. Not on this show. Oh, I have one more Scotty B. Let's listen to this Scotty B before I give you that slide. Let's get all the Scotty B in while we can.
Every day, and my prediction is that first quarter, second quarter, what we are going to see is we have brought the inflation down. It is curving down. And real income, the other side of that equation is real income growth, and we are going to see this from all this investment.
Would a $2,000 tariff dividend check going to people be inflationary?
Well, there are a lot of things that are going to happen next year.
Is that one of them?
And that could be one of them. And again, maybe we could persuade Americans to save that, because one of the things that's going to happen next year is the Trump accounts. Every child who was born from January 1st for the next 3 years is going to get a government account that goes into the stock market. So every American child born for the next 3 years, starting January 1st, is going to have that. They can take it out when they're 18. They're going to learn the power of compounding, and there's going to be a lot of financial literacy around that. And I think the reason that we saw kind of the disastrous election in New York is young people don't feel like they have a stake in the economy. So we want to give them a stake in the economy.
We know that.
Oh man, Scotty B never fails to deliver. Would a $2,000 dividend check be inflationary? Well, not if people don't spend it. Oh, by the way, everyone that's born right now, we're plowing money into the stock market for them, and they're not allowed to sell it until they're 18. Guys, I mean, come on, man. Wait, I want to show. I misplaced this slide. Hold on. I want to show this one on the back half of that. Because it's funny, we're going to give people $2,000 stimulus check, and no, it won't be inflationary, as long as they don't spend the money. Okay, well, let's check in on U.S. consumer sentiment. Is everyone happy? Is real wages growing? Can everyone afford everything that they need in their life? Oops. Consumer sentiment falls close to a record low. Views on personal finances sink to lowest in 16 years. Whoops. That's not good. So we're going to print the $2,000 for everybody. They're going to spend it. You're also going to be buying the stock market for toddlers and not letting them sell until they're 18. QT's ending, QE starting, rate cuts. Trump gets to appoint his own Fed chair. Japan is blowing up and needs a bailout. AI is blowing up and needs a bailout. But when you do bail out AI and it goes on to be successful, the success is going to unemploy half of the entry-level white-collar jobs. It's going to send unemployment to 20%. That then will force the U.S. government to print more money because they're not going to get enough tax receipts to afford the interest payments on their $38 trillion of debt. Did I get that right? And the only finite fixed supply asset in the world is going to go down? Nope. Not on my watch. Not on this show. That's why we got our own show, motherfucker. You guys can say whatever you want on CNBC, but this is our show. This is a show for the Bitcoiner. None of that dumbass garbage on this show. Another really interesting insight I wanted to point out is that the stablecoin supply has shrinked with this dip. And when I would make the case often on this show that the US government has an innate interest in Bitcoin because they have a definitive interest in stablecoins and they're correlated. The way to grow stablecoins is to grow Bitcoin. And everyone was like, I don't understand that, Jack. I don't get why it's good for Tether if Bitcoin goes up, or it's good for the United States if Bitcoin goes up because it's good for Tether, which makes it good for the United States. I don't understand that. Well, this is a great way to understand it, because when Bitcoin goes down, the stablecoin market cap has gone down, which means there's now less demand for US T-bills. So the government wants stablecoins to go up, not down. which means the government is going to want Bitcoin to stay up, not down. This is, now, I'm not saying the government's going to send Bitcoin to the moon. All I'm saying is the United States has a structural interest in Bitcoin. It does not surprise me they want to support the industry. It does not surprise me they want to end Operation Choke Points. It does not surprise me they want a strategic Bitcoin reserve, because stablecoins are like the reserve fiat with Bitcoin, is the dollar. They're propagating dollar hegemony globally. And so if Bitcoin falls, stablecoins fall. Stablecoins fall, demand for U.S. debt falls. Demand for U.S. debt falls, U.S. sovereign crisis, debt crisis. So this makes my point that the United States, Bitcoin is like universal acid, guys. It somehow, it seeps into the cracks of everything it touches and it just conquers it. Somehow, Bitcoin seeped into Washington, D.C., and it found itself where the U.S., if the U.S. wants to sell more of its dog shit debt, its best interest is to support Bitcoin. Don't debank guys like me. Don't make over-regulatory bullshit that make it harder for us to build businesses. Don't neglect Bitcoin as an asset class. That's actually in their best interest. Interesting. I'm just saying. Hopefully that's clear. And then this point kind of rounds it out. So this tweet, it's crazy to think that money supply is expanding this aggressively even as global central bank balance sheets have been contracting. We've seen a $10 trillion increase in global money supply in just the past 12 months. Now imagine what happens once central banks inevitably need to expand their balance sheets again, which in my view is only a matter of time. If this helps, mute the recent volatility noise in hard assets. This is the macro data point that ultimately drives the cycle. Again, guys, so this goes back to my Fed balance sheet screenshot. Bitcoin has gone from 16K to 126K while the Fed shrunk its balance sheet by 30%, while they removed $3 trillion off their balance sheet. And his point is, what the hell? Crazy to think how the money supply has grown without central banks printing money. Who's been printing the money? Fiscal dominance. The US Treasury, it's been the government's fiscal dominance is printing the money. Nothing stops this train, Lynn Alden. You see? And so the point is, we've been making new highs and Bitcoin's been running to the races while the Fed is in QT, while rates are high, while AI was financing itself not from government backing, but off balance sheet. Facebook was pouring billions of dollars of its own cash flow and own treasury balance sheet into funding AI. That money's gone. They need a government backstop because they're going to have to borrow a ton of money and they're not sure if they can pay it back. Again, and I'm supposed to be bearish? Are you nuts? Buy every dip. Buy every dip. QT is ending December 1st. It's in a week. Other side of Thanksgiving. The Fed's balance sheet stops going down. Do you understand how big of a deal that is? They have to print the money, guys. There's no liquidity in the financial system. The level of indebtedness is too high. They need AI for GDP growth. I mean, I can make this show 10 hours for how much money they need to print. The level of money printing is going to exceed COVID levels. It's just math. And so I love this tweet because, yes, the money supply has expanded greatly, and it has had nothing to do with central banks. It's all been fiscal dominance. Imagine what happens when the central banks and QT lower rates and start QE. Imagine. Look at this chart. Look at what happens when the Fed enters QE and starts printing money. Look at the steepness of these lines. That's outrageous. And you're selling Bitcoin? I rest my case. I rest my case. I already know the comment section. Jack leads a cult. Jack never says Bitcoin's going to go down. Like I said, if rates were going to hike as fast as they've ever hiked and we're entering a tightening cycle, I would have no problem warning everyone on the show, like, hey guys, listen, be careful out there. Over collateralize your loans, et cetera, et cetera. But it's the opposite. All right, Strike, real quick. This tweet got a lot of attention. I just want to resurface kind of what Strike is, what we're building, what we have built. So this tweet, we're building the bank for Bitcoiners. Jack uses Strike to direct deposit his paychecks. True. I direct deposit all my paychecks into Strike. It acts as my bank, and I convert all those paychecks into Bitcoin. So you can direct deposit your paycheck into Bitcoin. I have mine set to 100% conversion. And so that's true. You can buy and sell Bitcoin on Strike, obviously. Yes, I do that. You can custody your cash in Bitcoin. Yes, I do that. You can pay your bills with either your cash or your Bitcoin on Strike. So Strike, you have an account and routing number. So again, you can get your direct deposit there. You can also pay bills from there. So I hook up my credit card, my HOA, my electricity and ComEd bill. I pay all of my bills from Strike. You guys now know for fact that I do this because me getting debanked from Chase went super viral. So I didn't have another financial institution outside of Strike. And so I've just been living on Strike. It is my bank account. And then now you can borrow against your Bitcoin. So I've borrowed against my Bitcoin before. I used to pay my bills with my Bitcoin, which forced me to sell Bitcoin every time I had to pay bills, but it's what I had to do because I didn't own any dollars. I still don't own any dollars. Now I get to borrow against my Bitcoin. It helps me because then I don't have to sell my Bitcoin. I could borrow against it, manage my interest, and manage how much I'm borrowing. As my paychecks come in, I can pay off any amount of the borrowing I'm doing. I also can refinance the debt. So we have a combine your loans feature coming out in December. I can't wait to combine all my loans and then refinance my loans at an $80,000 price or whatever we're going to be at. That's going to be great for me. And then again, what we have coming soon. So first of all, we're bringing lending everywhere in America. We do believe we will be in New York, hopefully before this year is over, fingers crossed. And we will have loans everywhere in America. So that includes Texas, California, Tennessee, New York. We're very excited about that. After that, we will follow up with a line of credit product, which we're very, very, very excited about. This makes it so that you don't have to take out 12-month duration loans all at once. You can have a set amount of Bitcoin on Strike, and then as you need to pay bills, as you need to make a lightning payment, as you need to do stuff, you can even buy Bitcoin with your line of credit as a payment option. So we will dynamically extend credit against the Bitcoin you have on the platform so that you're only taking out loans in real time, and you can pay that down with your direct deposit. You can pay off the interest with your direct deposit. So it acts more as a real-time loan against your Bitcoin for those that want to live on Bitcoin and don't want to take out massive loans that can risk liquidation on a wick down. People are saying, I don't want to take out a large 12-month loan. I'd rather take out micro loans against my Bitcoin, more like a line of credit. So we're building that. Yield on cash. So everyone said, I do own dollars. I'm not like you. I don't own $0. I would like some yield on my cash. Can you guys give me yield? We looked into it. In fact, we can probably give you some of the highest yield on cash in the world because we lend to Bitcoiners. We lend to net producers. So, when I pitched this to the company internally, I said, listen, a company that's giving you right now 2.5%, 3%, 3.5% yield on cash at, let's say, Robinhood or Coinbase or whatever, these legacy financial institutions, they are doing it because they are sweeping your cash deposits and they're lending it overnight to the Fed. And so they're effectively lending to the government, okay? And the government is paying them the interest rate, whatever the interest rate is, and they probably keep a little bit to generate revenue. So whatever, 2.5%, 3.5%. The government the government's broke. The US government can't afford it. So rates are going to continue to come down to as close to zero as they can possibly get them. And so your yield on cash through other platforms is going to continue to go down to as close to zero because the government can't afford to borrow from you. Now, Bitcoiners are borrowing from Strike at 9, 10, 11%. Bitcoiners can afford that. Why? Because they're net producers to society. They have excess cash flow that they invest in Bitcoin. The Bitcoin, their savings is compounding at 50% a year on average. That means their net worth is doubling every 18 months. So we are lending to the net producers of society, the savers, the new wealth class. These people can afford it. They can afford it. And so what we do to offer our lending product is we talk to institutions around the world and we say we have a class of Bitcoiners that want to borrow a ton of money against their Bitcoin. If you give us your cash, we'll give you whatever, 5, 6, 7%, 8%, 9%. It depends on the size and depends on all sorts of stuff. And so when I talked to the company internally, I said, if people really want yield on cash, it was a weird feature for me because I don't have any cash. I'm like, what Bitcoiner actually wants this feature? Does anyone still own dollars? And they're like, yeah, well, we did customer research and you're kind of one of the only people in the world that actually owns no dollars. I said, wow, okay, that's weird. But anyway, fine. If they want yield on cash, let's offer this deal that we do to these massive institutions and banks. Let's offer it to our customers. If our customers have cash on the platform and they want yield on it, we can put their cash into the pool of capital that's lent out to Bitcoiners over collateralized. So it's a severely over collateralized loan. It's not like there's risk or rehypothecation or anything. It's like, yes, I would like to get 5, 6, 7% yield on my cash. And then if you want to withdraw it, you hit withdraw. We take your cash out of that pool. We give it back to you. We replace the cash that you had in there getting yield with a bank's cash, and voila. And so as the interest rates come down, our yield on cash will always be substantially higher. We'll probably go to market at 5 or 6 or 7 or 8% yield on cash, while other financial institutions are giving you 3% yield on cash, 2% yield on cash. We'll be able to more than double them. And again, it's because we're building a better bank for Bitcoiners, a bank for the net producers of society, a bank for the new wealth class. These people are working hard, saving money, and those savings are appreciating. Really cool stuff. And then we're looking into the first ever Bitcoin secured credit card. So really fun talking to Visa about that. And I know you guys really want it. I'm still not 100% sold on it. So keep commenting. Internally we're debating back and forth, but we're really looking into it. So anyway, we really are. And all of this is coming like in the next few months. Like we are, how we are at Strike. Ship, stay humble, ship the roadmap, stay focused, no distractions. And so really, really excited. I'm glad that everyone's starting to see the vision here. For the life of me, I've been trying to explain what we're doing at Strike for a while. It feels like it's finally clicking. We're building the global bank on top of Bitcoin, and we're able to offer higher yield on cash because of it. We're able to offer a savings account that's appreciating 50% a year on average. It means your net worth's doubling every 18 months, every year and a half. You can direct deposit your paychecks, pay your bills, and then once you get a line of credit and you got a credit card against that, it's gonna be the best financial account in the world. Already kind of is for me. I'm living on it. It's amazing. Banks don't like me. I built my own bank. Fuck you. Although we're not technically a bank. I have to be careful with that. So disclaimer, I mean bank in the metaphorical sense, like with the features we offer and stuff. We're not licensed as a bank, to be clear. Shout out our regulators. If you guys are tuning into the show, that's amazing. Much love. And then 21, we're rapidly approaching our December 3rd date, shareholder vote. So very exciting, and you guys know how this goes. I'm not going to risk running my mouth before that date. Doesn't make any sense. Okay. What are we time-wise? It was about an hour. So I read through all your guys' comments. You said, whoever said to shorten these episodes, give them the bird, screw them, tell them to take a hike. We want the long episodes. So I will gear these towards longer episodes. This one was not short, not long, because it is Thanksgiving week. I'm visiting family. Dollar Bill and the Bitcoin mom are over with my girlfriend right now. And so I couldn't make this one 3 hours. Well, I could do whatever the fuck I want. I just didn't want to. So family, man. Family's important. I don't live in the same state as my parents, so I really value the time I get to spend with them. So this one was a medium length, but once I'm back home from the holidays, I'll give you guys. You guys want a 3-hour episode? You know I like to talk. I'll give you a 3-hour episode. So that will be no problem. Okay, let me. I'm sure you guys have a million questions. Let me pull up the chat on my phone. See what you guys are saying. Longer episodes are the best. I prefer short episodes. See, man, you guys are complicated. All right, let me pull up Dylan's document of your questions, and we'll do some live Q&A. I got a little bit of time. Okay, macro questions. Can we talk more about the global impact of BTC versus just the US? Why is the price just always talked about in the context of the United States? Just because the United States is the reverse currency? I think they meant the reserve currency. It's talked about in the United States, yes, because the US is the reserve currency, and also because the US is the most indebted country. $38 trillion of debt. It juices the most liquidity into the financial markets. I mean, the entire global financial market revolves around the United States. You're right, though. I mean, there's tons of storylines. Like France is about to implode, and Europe is screwed. They're going to have to print a ton of money. So there's all sorts of headlines. I think this show revolves around the United States primarily because I'm American. And so I'm just talking about my own lived experiences and interests. And also because it is the reserve currency and it is the most indebted country. We are living through a sovereign crisis. And yeah, anyway. So kind of a combination of I'm American, I can speak towards my experience and my expertise and my interests, and because it is the center of the financial universe. I don't know if that suffices or answers your question, but sovereign debt crisis everywhere. China has to print a lot of money. Japan's collapsing. Europe is probably as fucked as it's been, I don't know, in a long time. So, not good. Okay, next question. Yo, Jack, what are your thoughts on the staggering accumulation of Bitcoin, and when do you think we will reach a supply shock, if you believe that supply shock is even possible? I mean, Bitcoin does this thing where it goes into extreme price discovery. And the very interesting thing about this is Bitcoin's the only asset where more demand cannot find more supply. Okay? So what do I mean by that? If the world wants more gold and they're willing to send gold to $20,000 an ounce, Elon Musk said he'll go get more gold from Mars, right? There's more gold in the ground. A lot of the existing gold supply has not been mined because it's uneconomical to do so. Once we get a higher price, we can find more supply. If everyone in the world wanted an iPhone, Apple would make 8 billion iPhones. If everyone in the world wanted a McDonald's cheeseburger, McDonald's would make 8 billion cheeseburgers. So the point is, with more demand, more supply, except for a few things in life. One of those things is time, right? With more demand, I can't find more supply of my life. One of the beauties of life is that I know I'm going to die. And that's actually, that level of scarcity is extremely empowering and extremely important. Because it's the reason that I get up and catch the sunrise. It's the reason I go to the gym every day. It's the reason I'm going to plan my wedding and I'm going to get married and have kids. Right? Because think about it, guys. If I was never going to die, I'd get married in 10,000 years. I'd go to the gym in 1,000,000 years. I'd have kids in 10 million years. I'd catch the sunrise in 1 billion years. Who cares? How do you value today? The promise of death is what gives our life value. Now, what's another thing where no amount of demand, no matter how bad I want it, I can't create more supply? Bitcoin. What death means to life, Bitcoin means to money, meaning it doesn't matter how much demand the world has for Bitcoin. We can't dig it out of the ground. We can't make more in a factory. We can't toss a bunch of Bitcoin on the grill and serve it with cheese in a bun. So all the demand for Bitcoin, they have to find a higher price. So what we see in price discovery for Bitcoin is every single time there is a supply shock, it sends Bitcoin to levels in which the existing market is willing to sell. So you get new supply of Bitcoin, not out of the ground, not out of a factory, but from existing holders, from people like us. Like, at what price would I be willing to go into my cold card and sell you some Bitcoin? And for me, it's like, you'd have to give me the Chicago Bulls to get some of my cold storage. But there's a price. If you give me the Chicago Bulls and the Chicago Bears, I'll grab one of my cold cards, you know? And so anyways, we see supply shocks all the time. And what's really interesting in Bitcoin is eventually the price gets to a point where people are willing to walk over to their cold storage and deposit onto something like Strike and sell. And that's when you find an all-time high. You know? So we see this all the time. And I expect Bitcoin to go into price discovery in 2026. I mean, again, guys, it's a liquidity game. It's a liquidity game. If they decided to print the money right now, I'd expect all-time highs in December. If it's going to be this like gradual deregulation, the Fed's going to pause QT, start 2026, but you know, I do expect a supply shock where the market is going to seek out where is the supply within the existing holders. At what price are these holders going to walk over to their cold card and get a house, get a car, pay off debt, put their kids through college, buy the bulls, whatever that is, right? Okay, next question. In your opinion, why aren't more institutions or banks or companies with large balances not adopting Bitcoin? If you're big enough, can't you just turn the tide to win as a first mover? Yeah. I mean, you kind of seen that a little bit. Why are they not? It's interesting. So like, take a big tech like Meta, for example. They're not, I'm reading the live chat. It is funny that it's the Chicago Bulls and the Bears. So Bulls, Bears, bull and bear cycles. Yeah, you guys are saying I can't buy the Bears because that would be bearish. I had to read that out loud. That's hilarious. Anyway, okay. Why doesn't Mark Zuckerberg buy a bunch of Bitcoin and be a first mover? Well, the reason is kind of funny, because his shareholders and his stock is so sensitive to the operating business. And so if he turned it into Bitcoin exposure, he would probably lose a lot of shareholders and a lot of investors. And this is in part the problem with the public markets, is you're so beholden to the short-term price of the stock, right? You know, I have a mentor that told me once, it's really difficult to build in the public markets because if they don't like your stock for 1 quarter, let's say 1 quarter, you're building for low time preference, they wanted high time preference, and they start shorting the stock. The stock price goes down, all your employees are compensated in the stock, they quit, they go to competitors, you have lesser talent, you're weak on employment, then you don't achieve your milestones, then you stop velocity on the product, and then the whole company kind of cascades down into irrelevancy. And so, you have to build towards what the public markets want as opposed to what you want. And so kind of balancing those two interests is very difficult. And so a big tech company would have a pretty challenging time saying like, hey, we really believe in Bitcoin because, half the market might say, oh my gosh, that's way too risky. I just wanted positive cash flow, high growth tech. Like now I'm going to, take it out of my index. Now I'm going to stop recommending it to my portfolio managers, blah, 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 blah. And it might crash the stock. Now someone with low time preference would say, I don't give a fuck about your opinions about my company. It's my company. I'm going to do what I want. But then the stock crashes, then the employees all leave because their compensation is now well below market. They go to competitors. You can't build and ship products. Your growth stalls. And so it's this kind of weird chicken and egg where it's, well, once Bitcoin gets reasonably accepted by the market, you'll probably start to see these larger players adopt it slowly but surely. But once Bitcoin's reasonably accepted by the market, it surely won't be as asymmetric of an opportunity. And so that's where folks like us listening to this show and 21 come in, is that we're willing, the way I view 21 is we're willing to be the company that says, listen, the world we're in today is fucked up. The world we're going is prosperous. It's amazing. There's sunlight, green grass, family, population growth, housing, wealth. That's the Bitcoin world. Fix the money, fix the world. And we're going to build a bridge between the world today and the world where we're going. And we're going to stand in the middle of that bridge and show you guys it's not going to break and that Bitcoin works and that you too can walk this bridge. But then by the time everyone starts to walk the bridge and it becomes norm to walk the bridge and the bridge is safe, then yes, Facebook will feel comfortable adding it, but then Bitcoin will be $1 million a coin, right? Does that make sense? So there's all sorts of reasons. I'll stop my answer there. But there's a lot of reasons, and that, though, is probably the most interesting because just the way the public markets work. How about credit card without partnering with legacy payment rails like Visa? Why do you need Visa? I mean, not to sound like a dick, but you can't launch a card without a card network, bro. Like, what do you mean? Like, what are we talking about? Not trying to sound like an asshole, but, you know, a card has to be launched on a card network. I mean, the real answer is these card networks have built the infrastructure to allow you to swipe your card. So, I mean, we could launch Lightning payments, which we did, though. We already did that. So, oh shit, I forgot to blow up my face. The editor's going to be pissed at me. We already did Lightning payments, and now Square's rolling them out, so that's good. But anyway, you need Visa or MasterCard to have a card program. There's no such thing as having one without them. I don't even know how. That's not physically possible. So it's like, yo, why don't you just be alive without water? It's like, well, I mean, I could try, but I would just die. You know, I need water. So anyway, kind of makes me sound like an asshole, but that's just the truth. How do you pay bills with only Bitcoin? Strike has this feature where you can pay bills. So again, Strike has an account and routing number. So I hook my Strike account up like it is a bank account to my credit card. I pay my HOA. What else do I pay? My electricity bill. That's pretty much it. I'm trying to think. Whatever though, if you had a car, whatever, you pay anything with it. And there's a setting inside Strike where Strike will pay your bills with either your Bitcoin or your fiat, and you get to choose which one. And the best is going to be the line of credit. When I say I want to pay all my bills by Strike extending a real-time credit line against my Bitcoin, so I don't have to sell my Bitcoin, but I don't have to hold fiat. It just creates a mini loan in real time to cover my mortgage or cover my car loan or cover the dinner I'm ordering. Now that is going to be incredibly cool. But if you wanted to use Bitcoin, you would just set the setting to pay all my bills with Bitcoin and hook up your Strike account to the places you need to pay bills. Boom, capiche, done. Easy. Are there Strike features that allow you to auto add collateral, combine/refinance multiple loans into a single loan? So we are launching the ability to combine multiple loans into a single loan. I believe that feature comes out in December, and it's already November 24th. So it comes out, we're weeks away. You can refinance loans today. You have to refinance them independently. So what I talked about earlier, I'm very excited about. I'm going to combine, I have 3 active loans right now. I can't wait to combine them all and then refinance them at this price. It's going to be awesome. So that's good. That'll be weeks away. And then auto add collateral. I don't know what you mean by that. Obviously we can't like auto pull from your cold storage. That would not be good. And that's also physically impossible. So no, but I'm not totally sure what you mean by that. But if there are future requests, as you guys know, just leave them in the comments. We're always listening. Oh yeah, you guys like how I got my headphones set up? It's a tough gig. I'm trying to make it so that you guys can hear me without it rubbing on my face or my hoodie. Whatever, not a professional podcaster. Loan consolidation will be available before, oh, whoops. That was from my colleague. That was what I was supposed to say. I thought that was a question. And here we don't have, okay, got it. So for California loans, end of the month or like beginning of the month, and idea on what minimums would be. Our goal for California loans is before the end of the year. I think, I know my colleague's going to be pissed if I say this. I think the goal is December 9th. But I don't know. These dates move. But I would say second, third week of December for California. Everywhere in the US. And the minimum for California will be $10,000. Yeah, fair. Okay, I wanted to ask about Strike's Bitcoin lending service, but I wanted some information first. I thought I would try to get a hold of customer service before I sent Strike over 10 Bitcoin. Yeah, I mean, for those that don't know, let me pull it up actually. My face can go back to small. Oh shit. There we go. For those that don't know, we have a service called Strike Private. Strike.me. Let's go to our website. Private. So we have this service. It's a white glove concierge service. It's specifically for high value or high net worth, but generally speaking, you feel free to reach out and we're happy to walk you through the product. So we also, in the US, we have on-call support. So you can call us, we'll pick up the phone, reach out to our support staff. Our support staff is 24/7. We have support staff in every time zone around the world. So you guys just reach out to us. If you're like, oh my gosh, I don't understand how this works, or I want questions, or, you know what's funny? I've actually sat on calls with customers while they open the loan. Like sometimes people just want to be on a Zoom call or on the phone with me to open up a loan because it just makes them feel better. And that's fine. Our job is to make you guys wealthier with Bitcoin, make your lives better because of Bitcoin. Like we're here to service you. We are that financial institution. So anyways, yeah, just reach out. All good. Okay. Next question. After listening to you for so long, I'm curious, why were you banking with Chase when you have no fiat? Yeah, good question. My situation with Chase. My dad has been a private client with Chase since before I was born. And I got grandfathered into the private client service at Chase because I was like a sub account to his. So I've been a private client at Chase since I was like 15 or whenever I got my first bank account as a kid. So I did have no fiat with Chase. But the interesting thing about debanking me is it's not like people have said, well, it's because you weren't an active, profitable customer for them, which would be very different than claiming that I had suspicious activity on my account. But nonetheless, let's move on from that. I am a sub account under my father. And again, I haven't really used the account, especially since I don't own fiat anymore. But that's why I had the account. So it was just really weird. Like my dad actually got that letter that said like, "Dear Jack, get off of our bank," basically. And he sent me a picture and he was like, "What the fuck did you do? Like, am I gonna get debanked too?" And I was like, I didn't do anything. Like, honestly, I thought about it earlier today. Should I just post all my bank statements on the internet so people can see, like, I did nothing. and there's no like suspicious activity. The only activity I've ever done is money would go between Strike and Chase, like before we had all these features and stuff. So that's the story of my account and how I got it and all this stuff. It's not like I opened a Chase account this year because I secretly have $1 million US that I wasn't telling you guys about. I was like grandfathered into the private client service because my dad, and they threw me out of the bank for, I don't know why. I mean, it seems pretty obvious. And I mean, I told this story to you guys a few episodes ago, and it happened. I mean, my dad got the letter in September. Then I walked into the private client team in Chicago, and I was like, hey, was this a mistake? And they're like, Mr. Mallers, we can't have anything to do with you. We're not allowed to tell you why. It was weird. It was super weird. Now, though, with all the stuff coming out about Chase, it seems like it's potentially related to Bitcoin. But anyway, that's what happened. You guys know how I feel about it. I wasn't sad. I framed it. It's actually, I'm such an idiot. It's in a different part of the house. I should just go grab it, but it would take me literally 5 minutes to run and grab it and get it back. Damn. I'll show it to you guys next episode. Okay. Question for Jack. How has the carnivore diet changed or improved your health? What have you noticed, positive or negative? Ooh, good question. So I'll tell you guys, so some of you guys, I will say this. I almost don't want to talk about my dietary choices because the story I told you guys of how I was carrying 2 pounds of McDonald's patties through the Cantor conference, you guys were all in the comments like, that's not high quality beef. Blah, 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 blah. And like, carnivore is really bad for you. You should be vegan. So, you know, I'm going to regret talking about my dietary choices. But I think most of the Bitcoiners will find this interesting. So the thing that really sold me on carnivore is I was talking to who is now like my carnivore coach, because I really was interested in the science and I really wanted to get it right and give it a try. Because here's the deal, guys. You could try anything for a month, okay? Give me a fucking break that I would try vegan for a month, carnivore for a month, anything for a month. Experiment for yourself, have your own opinions, be curious. Like, that's very much what I stand for. And so I really was interested in carnivore. And so I was talking to this guy who's now my coach, and he made this point to me where he said, you know, the human energy source is calories, right? Your calorie intake is how you source energy for your body. And he made the point that said, you know, what's really backwards is humans today, in order to look good and think that they're in optimal health, they restrict their calories. So they calorie count, and they're like, I'm going to eat 1,800 calories, I'm going to run long miles, and I'm going to drink a bunch of caffeine, which is going to suppress my appetite. So appetite suppressants and fake energy stimulants like coffee, and I'm going to suppress my actual natural energy source, which is calories. And he said, you know, as a Bitcoiner, can you imagine if Bitcoin was like, no, we don't want a certain amount of energy on the network? Or can you imagine if the United States said, no, that's too much energy. People are flying too many planes. They're washing too many clothes. They're watching too much TV. They're taking too many Ubers. We need people to be kayaking to Europe. We need people to be hand washing their clothes. He's like, of course not. Energy is it's the resource that correlates to prosperous life, prosperous society, prosperous species. And so he says, the interesting thing is if you put your body in ketosis, where it's running on fat as opposed to carbs or sugar, so it's processing fat as energy, and you train your metabolism in your body to be able to take on tons of calories. Like, what if you could eat 4,000 calories of ribeye in one sitting, and your body was able to actually make use of that energy? You'd be able to quit caffeine. You'd be able to work on 4 hours of sleep. You'd be able to travel better. You'd be a better CEO. And I was like, that makes a lot of sense to me. Why do people limit calories and drink a bunch of coffee. They chug black coffee to skip breakfast. That's weird. And so I gave it a try. And I quit coffee. I quit, like, all I did was eat meat and eggs. And I can put down 2 to 4 pounds of steak in one sitting. I eat once a day. And I'm full of energy. I travel more days out of the year than I'm at home. I run 2 massive companies. I do it with no caffeine. I do it with 1 meal a day. And it's because my body is optimized to take in more energy. And there's all sorts of really interesting science, like what it does to my brain, what it does to muscle development. So I love running, but I've pared it back a lot, and I do more weightlifting, weight training now. So there's a lot of interesting correlations between muscle growth and longevity. But anyways, and I started wearing an Oura ring, and my heart rate and my cardiovascular health was greatly improving, and the quality of my sleep without me running and stuff. Like my resting heart rate is like in the low 50s, which is crazy. My HRV is extremely high. My sleep is incredible. And I could run around the world, run multiple companies without coffee, without much sleep sometimes. Like sometimes I'll get on this show and everyone's like, this guy must have chugged 10 espressos. He's ranting and running around. I'm not taking anything before anything I do. It's all natural. I don't know. Food for thought. It's interesting. Now, do I think everyone should do it? No, you should do whatever you want. You know, some people would rather have pizza than get into the, metabolic science of things. I'm curious. I like being the best version of myself, and it's worth giving it a try. Maybe next year I realize it's not for me, but I don't know. I tried it. It's incredible. I feel great, and it makes sense. It reminds me of early Bitcoin, where it's like, wait a second, was everything I was told about health and science a lie? I should just try it for myself. I should just buy some Bitcoin, make a transaction, buy a hardware wallet, figure it out, track the price a little bit. Same thing. It's just like, okay, I asked this guy, I don't have the time to be like all carnivore researching and stuff. I'm busy. Do you mind being my coach? And he was like, yeah, dude, let's do it. Let's give it a try. So anyway, for all the folks interested, and for all the people in my comments, they're going to kick and scream and moan and cry like a little fucking female dog about my diet choices. I don't give a fuck. Fuck you. Hey, Jack, how are you attacking the Thanksgiving meal this year on carnivore? Well, the first ever quasi-carnivore was my dad. I basically lived off my dad's grill growing up. He just made, so my dad, we're not a turkey household or whatever people eat on, like nobody wants a weak ass, dry ass bird for holiday. Come on. We're supposed to celebrate. We're supposed to be enjoying ourselves. I'm going to eat a weak ass, fat ass, dry ass bird? No. So we've got short rib, rib eyes, roast. We're eating meat in the Mallers household, in the dollar bill household. So that's our. Maybe I'll take a picture. I'll put it on Twitter. Cool. Well, anyway, also I'm getting I get my blood work done a lot too, obviously. I'm just interested. I'm super interested in, oh shit. I didn't blow up my face. I'm super interested in like truth, in real, in science. Like I posted a video today. Let me show you guys what I posted today. And then I'll end the stream. But hold on, real quick. This video. Let me play it for you guys real quick. We don't as society, we've drifted so far away from what's real. We don't use real money anymore. We use printed pieces of paper. In America, we don't eat real food anymore. You look on the back of your groceries, there's 77 ingredients. Metabolic disease is through the roof. Cancer rates have never been higher, and half the country's fat. Part of what I want to represent is being real. I think humans are a natural byproduct of Mother Nature. The human story is really like commercializing energy from the sun. Being connected to nature, eating real foods, operating around a moral ground of truth, not lying to yourself, not lying to those around you. And so the difference between someone whose life savings is evaporating to a point that's making them depressed, suicidal, living a life that they don't enjoy, versus savings that are appreciating, that's empowering them to have more family, enjoy more housing, invest more in the future that they want to see. The difference between the two is education. Everyone has access to Bitcoin. There's no privileged group that gets access to what we all understand versus other. It's just, can you go out and educate it? And I try and do it in a way that's authentic. That's part of the brand with Strike. What we're bringing to Wall Street with 21 is authentic, truth, Bitcoin, real. I think we've been starved of real. So anyway, somehow through this exploration for real, for truth, for trying to represent my generation in a hopeful way, like we can find our way out of this. I think I found my way in the diet rabbit hole, or the health rabbit hole. So when I feel ready, I'll tell you guys more about carnivore and stuff, but I'm still trying. It's like me and Bitcoin in 2013. But it's unbelievable. I mean, so far, unreal, no caffeine, sleep incredible, vitals incredible. I mean, everything amazing. And I love steak. Okay, was there another question, Dylan? I forget. Let me see. I feel like there was, but this is getting really long. Oh, no, there's not. All right. Go to a chiropractor. I'm good. All right. I will talk to you guys next week. So between now and then, there's Thanksgiving. Happy Thanksgiving. Unbelievably thankful for you guys. We're over 40,000 subscribers on YouTube. We had 40,000 views on YouTube alone last week. These are weekly live streams. Me posting that I got debanked by Chase, by Epstein's banker, and you guys rally to have my back. This is just the coolest. This is the coolest revolution on the internet. We're pushing truth, principles, morals, ethics, hard money, proper living, net producing. We're just memeing it with live streams, with software, with free speech on the internet. It's crazy. So I don't know. Now's the year where you get all sentimental and you look back and appreciate what you're thankful for. So you guys mean a lot to me, even though you make fun of me every week in the comments. I love it and I appreciate it. And I feel very lucky to have kind of tripped into whatever we got going on this show. It's fun. So I love you guys. Enjoy your Thanksgiving. I hope you're able to close the charts and spend some time. Hopefully this episode gave you the confidence that the world's not falling apart. We're going to be fine. And I will talk to you next week. Blessings. Take care.